Yeah. Okay, come. Welcome to today's report, the 3rd of November. Today is a very, very interesting day. We have the non-farm payroll, and you have survived the entire, what you call the volatile week. Congratulations to you. If everything is still intact, that is a very, very good thing. Really? Okay.
ไม่ค่อย想多
Right. Okay. Come. Let's go to the events. Oops. I better put this up because of this. Now, the Federal Reserve's 12 voting members unanimously voted to maintain the Fed fund rate at 5.5%. And that's aligning with universal expectations so far. But however, the Fed hinted at a possibly of a rate hike in the future. This is its hint. It says that. But what we want to do is that we want to investigate, how true is this? Because inside over here, this is what they are hinting via these words, okay? Because in his prepared statements, right, Powell said two things. The first, the economy, he noted, expanded at a strong pace in the third quarter, a shift from previous statements of solid pace. Okay, so this is the new word, strong pace. In the past, he said solid pace. Okay, strong is a stronger word, obviously. Okay, and when it comes to job, right, he said jobs had moderated since earlier in the year but remain strong. Okay, and in the past report, it said mentions of hiring slowdown in recent months, right? So this is another change. So addressing inquiries on whether the current financial conditions suffice as a substitute for restricted enough rate hikes, Powell expressed, we are not confident yet. We are still evaluating whether policy is appropriately restrictive, adding that a decision regarding December has not been made. Okay, now these are the words that kept it like, this like hinting is that we are not confident yet. That means there is still this possibility of a rate hike. Okay, but then again, he said a decision regarding December has not been made. That means there's also this possibility that we might not see a rate hike this year. Okay, so these two statements right over here, these two statements here is hawkish. Hawkish means it's pointing of a possible rate hike, but Powell here said nothing to shift the market's expectation that officials won't raise rates in December. Okay, so this is something that we need to be clear so far. He mentioned all this, is just telling you there's a possibility, but he did not mention December at all. So based on this, I don't think we're going to see much in December. Now, this one all upside down today. Anyway, recent weeks we had the FOMC members indicating they aren't eager to hike again unless hotter than expected economic data force their hands. And based on all these developments we've seen so far, even the economists, they're coming out, like for example, Diane Swonk, the chief economist at KPMG, said that if they want to hike again this year, Powell would have pointed much more to the risk that consumer spendings would undo the progress we have seen on inflation. Okay, and then a quick check on the CME also showed that the probability of December rate hike is not high, and no rate hike shows is above 80%. Okay, so I got to do some correction over here. No rate hike is showing 80%, and basically Michael DePaz, which is the global head of rates trading at Citadel Securities, sums it all by saying they want to maintain a hawkish facade while believing deep down they've probably done enough. Okay, so he is more towards it. The Fed is not going to raise anymore. It's just showing that that phase that they want to do it to keep everybody on their toes and basically to save face, because if they said they don't want to, only to see interest rates go up again, is not good for them. It's just showing that they just don't know what they're doing, or they can't control the situations at all, right? So anyway, to what extent it represents the true intention of the Fed, right? You know, raise or no raise, I think we need to look at the dot plot that's going to come out in December. Okay, now dot plot over here shows who is voting for what. Okay, and usually the economists will look at the dot plots to understand the thoughts, you know, how many person is leaning towards no rate hike, how many person is leaning towards a hike, and so or rate cut, and so on. And the most recent dot plot disclosed in September projected rate cuts being deferred to the later half of 2024. So if they you know, if the voting members are really not interested in the hiking rates further, we would be able to see this in this current dot plot already, because if there are any changes from the previous September one, then it will really truly reflect. Okay, but if you see there are no changes at all, it's still the same people voting for the same thing, then yeah, it can mean another thing again. Or maybe there are changes where we're showing that more people are looking towards a rate hike or maintain rates, or all these kind of things. We need to see this dot plot. It's very, very crucial, is to see if there are changes and the general consensus so far. Now, with the shift in market dynamics, right, market now anticipates the first cut by June. Okay, and nearly a full percentage points of cuts over the forthcoming year, doubling the predictions made in the last dot plot. Okay, this is totally different right now, and we are waiting for this confirmation. So just remember, the next FOMC in December will be crucial, and it's crucial not because they want to do the rate cut or no rate cut, you know, all these kind of things, but to see the changes in the sentiments of the voting members. But anyway, we have more pressing matters to deal with, which is today's non-farm payrolls, along with the wage growth rate. Okay, this release we're going to see today is poised to capture the close attention of traders, economists, business, policymakers, everyone. Okay, because this data holds significant potential to influence decision and shape expectations given the latest feedback by the Fed. Okay, so be on the watch out for this. Yeah, let's move on to the charts. That's all. Okay, because that's the end of the fundamental report for today.